Welcome to Simply Explain All, where we uncover the hidden economic forces shaping our world and the future of global manufacturing. For nearly 2 decades, Samsung and Vietnam have shared a prosperous journey, transforming a developing nation into a global tech powerhouse. This partnership was once considered the perfect economic marriage, driving growth and creating millions of jobs for the local population. However, recent trends suggest that this massive giant is slowly shifting its focus away from its longtime strategic partner in Asia. Samsung is responsible for over 17% of Vietnam's total export turnover, making it a critical pillar of the national economy. The label "Made in Vietnam" has become globally recognized, largely due to the immense production capacity established by this Korean conglomerate. But why is this national enterprise now looking elsewhere? And what does this mean for the future of the Vietnamese economy? Today, we dive deep into the reasons behind this strategic shift, exploring the complex mix of taxes, trust, and technology. To understand the present conflict, we must first appreciate the sheer scale of the contribution Samsung has made over the years. Let us rewind the clock to see how a foreign company became the beating heart of an entire nation's industrial sector. Over the last 17 years, Samsung has invested approximately $32 billion, turning rural areas into bustling hubs of modern industry. Provinces like Bac Ninh and Thái Nguyen were once agricultural backwaters, but they have now transformed into wealthy industrial manufacturing zones. This $32 billion injection did more than just build factories. It completely revitalized the local infrastructure and the surrounding communities. Samsung did not just wait for the government. They actively helped develop roads, power grids, and essential logistics for their operations. They invested heavily in human capital, training hundreds of thousands of Vietnamese workers to operate advanced machinery and sophisticated production lines. This created a stable livelihood for countless families, lifting many out of poverty and creating a new generation of skilled labor. The number of local enterprises partnering with Samsung has increased 12 times in just a decade, creating a strong supply ecosystem. From packaging to complex components, a vast network of local suppliers emerged to support the production needs of this tech giant. This ecosystem proved that Vietnam could move beyond simple assembly and participate deeper in the global value chain of technology products. The factories ran day and night, pumping out products that were shipped to every corner of the globe, boosting national pride. Vietnam was hailed as the new factory of the world, and Samsung was the primary architect of this remarkable economic success story. However, even the strongest partnerships can face challenges when external conditions change and promises are put to the ultimate test. The first major crack in this relationship appeared with the introduction of the Global Minimum Tax Policy, regulated by the OECD. Vietnam decided to apply this new tax rule, effectively ending the preferential treatment that had been promised to foreign investors previously. Samsung had originally been promised tax exemptions and reductions for 15 years, a key incentive for their massive initial capital investment. The unilateral change in policy felt like a betrayal of the original agreement that had brought them to the country. This policy shift meant Samsung faced an unexpected additional tax bill of approximately 430 billion Korean won. For a corporation focused on efficiency, an unexpected cost of over $300 million is a significant blow to operations. It was not just about the money. It was about the stability and predictability of the business environment in Vietnam. Samsung also felt a sense of unfairness when comparing their situation to the incentives offered to newer partners like Apple's suppliers. They felt that the rules of the game were being changed in the middle of the match, favoring new players. This sentiment of broken trust is a dangerous signal for any developing economy that relies heavily on foreign direct investment capital. This situation mirrors the story of coach Park Hang-seo, who was once a national hero but left amidst cold contract negotiations. Just like in sports, in business, past contributions are often quickly forgotten when new negotiations and financial interests come into play. Samsung has seen this pattern before in China, where they eventually shut down production due to rising costs and hostile environments. The exodus from China serves as a stark historical warning of what can happen when a manufacturing giant decides to leave. Even now, in India, Samsung faces challenges as the government demands access to proprietary software source code, creating new friction points. Faced with these global uncertainties, Samsung is quietly executing a strategy to diversify its supply chain and reduce single-country dependence. They are expanding production capabilities in India, Poland, and Mexico, ensuring that they are not overly reliant on Vietnam anymore. New facilities are rising rapidly in these regions, offering alternative hubs that are closer to key markets in Europe and America. But the biggest threat is not just other countries. It is the rise of smart factories, powered by artificial intelligence. Automation allows Samsung to reduce its dependence on cheap labor, which was once the primary attraction of investing in Vietnam. With robots and AI, the cost advantage of low-wage workers diminishes, making it feasible to move production back to developed nations. This trend, known as reshoring, could see high-tech manufacturing returning to South Korea, leaving traditional manufacturing hubs behind in the dust. For Vietnam, the potential departure or downsizing of Samsung is a wake-up call to improve its policy stability and environment. The country stands at a critical juncture, needing to decide how to retain investors while maintaining fair tax regulations for all. Rebuilding trust and offering competitive advantages beyond just tax breaks will be essential to keep the manufacturing engines running. From taxes to technology, the story of Samsung in Vietnam is a complex lesson in global economics and industrial strategy. We have witnessed the full life cycle of an industrial boom, and now we are watching the early signs of a transition. The global economy is fluid, and capital will always flow to where it is treated best and where it grows fastest. Thank you for watching this deep dive. Please subscribe to Simply Explain All for more insightful stories about the global economy. The road ahead is uncertain, but understanding these forces helps us navigate the future. See you in the next video. Global trade never stops, and neither do the complex decisions made in boardrooms that affect millions of lives worldwide. Every signature on a contract carries weight, shaping the destiny of nations and the livelihoods of their citizens for decades. In Seoul, strategic planners are constantly evaluating the next move, balancing profit margins against geopolitical risks and opportunities. For the workforce, the only defense against these shifts is adaptability and continuous learning to stay relevant in the market. FDI flows are volatile, and relying too heavily on a single partner is a risk that Vietnam is learning to manage. This is why developing domestic corporations is just as important as attracting foreign giants to ensure long-term economic sovereignty. Investing in education and R&D is the only way to move up the value chain and avoid the middle-income trap. The future lies in high-tech industries like semiconductors, where value is created by knowledge rather than just manual assembly labor. Collaboration between human creativity and robotic efficiency will define the next era of manufacturing in Vietnam and the world. In a hyper-connected world, news of policy changes spreads instantly, influencing investment decisions faster than ever before in history. Sustainable development must also be considered, as green manufacturing becomes a requirement for global companies like Samsung and Apple. Energy security and green energy availability are now top criteria for tech giants looking to set up new production hubs. Vietnam must ensure a stable and clean energy supply to compete with other emerging markets like India and Mexico. The vibrancy of the Vietnamese economy is undeniable, but it must evolve to meet the higher standards of global investors. time is ticking for policymakers to adjust regulations and offer new incentives that align with the global minimum tax framework. Legislative agility is required to navigate these turbulent waters and protect the national interest while keeping investors happy. Innovation drives Samsung, and they need an environment that supports innovation, not just one that offers cheap land and labor. The opening of the R&D Center in Hanoi is a positive sign, showing that Samsung still sees value in Vietnamese brainpower. Transitioning from assembly to research and development is the path forward for a sustainable partnership between the two entities. The bond between Vietnam and Korea remains strong, rooted in cultural similarities and decades of economic cooperation and exchange. Beyond factories, tourism and cultural exchange act as soft power glue that keeps the relationship resilient despite business frictions. Cultural integration helps, but hard numbers and profit margins will always dictate the final decisions in the corporate boardroom. Samsung operates on a global scale, and every local decision is weighed against its impact on the worldwide bottom line. As technology advances, the human element in manufacturing decreases, making geography less relevant than infrastructure and energy costs. Proximity to end markets like the US and Europe is becoming more important to reduce shipping times and logistical risks. This explains the shift towards Mexico, which offers duty-free access to the massive consumer market of the United States. Similarly, Poland serves as a strategic gateway to the European Union, allowing for faster delivery and lower tariff barriers. In the era of instant gratification, speed to market is a critical competitive advantage that dictates manufacturing location strategies. Vietnam must improve its logistics and customs procedures to compete with these geographically advantaged locations in the global race. Air freight capacity and efficiency are vital for high-value electronics that cannot afford to sit in shipping containers for weeks. Every hour saved in transit translates to millions of dollars in efficiency gains for a high-volume manufacturer like Samsung. Digital supply chain management using blockchain is another frontier where Vietnam needs to upgrade its digital infrastructure capabilities. Cybersecurity and intellectual property protection are also non-negotiable requirements for hosting advanced technology production facilities today. Protecting trade secrets is paramount, especially when manufacturing cutting-edge devices that define the company's competitive edge in the market. As we move into the era of spatial computing and VR, the complexity of manufacturing will only increase further. Vietnam needs to prove it can handle this complexity, moving beyond simple assembly to sophisticated precision engineering and testing. The skill level of the Vietnamese engineer is high, but the quantity of highly specialized talent needs to scale up. Universities play a crucial role in churning out the talent required to keep foreign investors interested in the long run. A young, dynamic, and educated population is still Vietnam's greatest asset in the eyes of global investors like Samsung. The demographic dividend is real, but it will not last forever, so the window of opportunity must be seized now. As the population ages, the reliance on low-cost labor will become an obsolete strategy for economic growth and development. Automation is inevitable, and Vietnam must prepare its workforce to work alongside robots rather than compete against them. From factories to service sectors, automation is permeating every aspect of the economy, changing the nature of work itself. Adapting to this new reality is essential for survival in the competitive landscape of the 21st century global economy. Leadership visits often signal strategic shifts, and recent movements suggest a recalibration of the Vietnam strategy is underway. Where the executives fly often indicates where the money will flow next, and observers are watching these movements closely. Analysts predict a gradual diversification rather than an abrupt exit, but the trend line is clear and undeniable. Growth may plateau before it declines, giving Vietnam a buffer period to adjust its policies and find new partners. Diversifying the investor base to include other giants like LG, Foxconn, and Intel is crucial for national economic security. The old adage of not putting all your eggs in one basket has never been more relevant for Vietnam's economy. Just as a farmer diversifies crops to protect against famine, a nation must diversify its industries to protect against recession. Building smart cities that attract global talent is the next step in evolving from a manufacturing hub to an innovation hub. Zones like Hua Lak High-Tech Park need to become true centers of excellence, rivaling Silicon Valley in their ambition. Innovation must be in the DNA of the new economic policy, fostering startups and unicorns alongside established foreign conglomerates. Homegrown success stories prove that Vietnam has the potential to create value, not just assemble products designed by others. Samsung's own innovation campus programs are helping to nurture this local talent, leaving a positive legacy beyond just factories. These educational initiatives build goodwill and ensure a supply of skilled workers for whatever operations remain in the country. The rivers of Seoul and Hanoi flow differently, but they both nurture the civilizations that are now inextricably linked by commerce. Bridges of cooperation have been built, and maintaining them requires constant maintenance and mutual respect from both sides of the partnership. The goods flowing across these bridges represent the livelihoods of millions and the aspirations of a rising nation. Ultimately, the consumer holds the power, but the supply chain behind the product is a fragile web of geopolitics. Disruptions can shatter this web easily, as seen during the pandemic, prompting the current drive for diversification and resilience. The pandemic taught Samsung a hard lesson about concentrating too much production capacity in one single geographic location. Lockdowns and supply shocks forced a rethink of the just-in-time manufacturing philosophy that had dominated for decades. Now, redundancy and geographic spread are valued more than absolute efficiency, driving the expansion into India and Latin America. A decentralized network of smaller factories is more resilient to local shocks than one massive megafactory complex. Samsung is redesigning its global footprint, and Vietnam must accept its new role as a key node, not the only hub. Being a key piece of the puzzle is still valuable, provided Vietnam can adapt to fit the new shape of the global strategy. It is a high-stakes game of economic Tetris, where fitting into the right spot determines success or failure. The era of cheap labor is ending, and the era of skilled labor and smart policies is beginning right now. As the sun rises on a new economic era, Vietnam has the opportunity to reinvent itself and move up the value chain. With the right policies, the country can catch the winds of change and sail towards a more prosperous and sustainable future. Navigating these changes requires a clear moral compass and a strategic vision that looks beyond the next quarterly report. Stability acts as a lighthouse for investors, guiding them through the storms of global uncertainty to safe harbors. If Vietnam can provide that stability, Samsung will likely remain a major partner, even if the nature of the partnership changes. Like an old friendship, the relationship may evolve and face challenges, but the shared history provides a strong foundation for the future. We are turning the page to a new chapter in the Samsung Vietnam story, one defined by quality rather than just quantity. What will be written on this new page depends on the actions taken today by leaders in both Hanoi and Seoul. Cooperation remains the key word, but the terms of this cooperation are being renegotiated in real time before our very eyes. Vietnam is a resilient nation that has overcome far greater challenges than economic shifts, and it will likely adapt and thrive again. The transformation of its people from farmers to engineers is the true success story that no corporate strategy can erase. The next generation is ready to take on the world, armed with knowledge and ambition that transcends borders and corporations. They speak the language of code and technology, the universal language of the future economy that binds us all together. In this interconnected web, Vietnam and Samsung are just two nodes, but their interaction ripples across the entire system. A tax decision in Hanoi can cause a stock fluctuation in Seoul and a factory opening in New Delhi. Understanding these connections gives us insight into the fragile yet resilient nature of our modern, globalized civilization. We hope this video has given you a clearer perspective on the forces at play behind the headlines you read. From investment billions to tax percentages, every number tells a story of human ambition, national pride, and economic reality. The story of Samsung in Vietnam is far from over. It is simply evolving into a new, more mature phase. If you found this analysis valuable, please hit the like button and share your thoughts in the comments section below. Don't forget to subscribe to Simply Explain All for more deep dives into the world's most fascinating stories. Goodbye.